Hey everybody, welcome to Chapter 8 of Price Analysis, a fundamental approach to the study of commodity prices. In this chapter, we're going to talk about forecasting production for commodities like corn, soybeans, or wheat that are planted once a year and harvested once a year. So to put things in the proper context, take a look at Figure 1. This is a snippet of a recent WASDE report for corn, and I'm showing here only the rows that pertain to supply of the commodity. And you can see we have rows there for area planted in acres, area harvested in acres, yield per harvested acre, beginning stock, production, imports. So if we can come up with estimates of each of these rows, then we will essentially have our estimate for production. And what we'll focus the most on in this chapter is coming up with good estimates for area planted and harvested and yield per harvested acre. Imports are pretty consistent from year to year, and so it's not that big of a deal to kind of try to forecast that number. And beginning stocks we usually have a pretty good idea of from the information that we glean from the previous crop year. So really, forecasting supply is really all about forecasting production, and that is coming up with good numbers for acres planted and acres harvested and yield per harvested acre. So the first step is to talk about how we could go about estimating acreage. And acreage is going to be influenced by recent trends, so we can go take a look at historical data, and it'll also be influenced by the relative profitability of planting the crop that we're focused on, like corn, and competing crops like soybeans or wheat. So first, let's take a look at how we can go to the USDA National Agricultural Statistics Service and get actual historical data. So I've got a link here in the steps that give you instructions for clicking through the different fields, and let's just go ahead and walk through that so you can see how you can go out in the future and get access to historical data that will be important for making different kinds of price analysis. So I'm going to right click, open in a new tab, and come over here to the NAS website. And this is just a simple query form. If we want to get historical acres for corn, the steps that we should go through are clicking in the crop field, clicking on field crops because corn is a field crop, coming down here and selecting corn. And then there's a lot of different information here that we might be interested in. We'll talk later in the chapter about crop condition reports and crop progress reports, and there's all kinds of different information here. We've talked about the quarterly stocks report. So this is a web portal where you can go back and get historical data on all of those things. But what we're interested in for this example is acreage, yield, production, and price. So I'm going to click on that. And then let's go get several historical years here. So to do that, I click on the most recent year that I want, and then I scroll down. And if you go all the way to the bottom, notice this data set actually goes all the way back to 1866, which I find absolutely incredible. But we're not going to go back that far. Let's just go back to, say, the mid-80s. Oops, and I already made a mistake. So the way that you capture multiple years is to click on one of the ends of it, and then I'm going to go back up here to the top, Shift. So I'm pressing the Shift key on my keyboard, and then I click the other end of the range, and it highlights all of it. Alright, so now we need to select the geographic level that we want, and let's just focus on the national number. Go ahead and click US total, and now our data should be ready to go if we've got our query set properly. Alright, so here is the data set. You can see it starts in 1985, and it's organized a little bit weirdly because we have our area planted in acres here, and then some of the other fields that we want are listed in separate rows. So when we download this data set to work with it, we'll have to clean it up a little bit, but that's really common in any kind of data analysis, so we won't be bothered by that. So if we were going to do an analysis from scratch, we would click download CSV of this data set, and it'll download the CSV file. But let's just go back to the textbook and we'll talk about some of the things that we can glean from that data set. So the first thing I want to do is take a look in detail of this figure 3, where I've got corn planted acres graphed along with the corn and soybean price ratio. Now I want to take a look at a little bigger picture of this, so I'm going to right click and open this thing up in another tab so we can really look at the big graph. So you can see the blue line is corn planted acres, and you can see that that line has been trending up in the recent last 15 to 20 years, and it's topped out at a maximum of like 96, 97 million acres, which is pretty high historically. And then we've been trending down a little bit in more recent years, but we were back up over 90 million acres in 2016. So the second line there is in orange, and it is the ratio of the corn season average price with the soybean season average price received by farmers. Now, I plotted this because I wanted to quickly show the positive relationship between the strength of corn price relative to soybeans and the decision to plant kind of additional acres to corn. It's not a perfect measure because you would really want to graph the prices that farmers were seeing for that season's crop at the time that they were making planting decisions. And as I said, the prices that are plotted there are a season average price. So they will be correlated in the right direction, but they will have some of the effects averaged away by the price changes that happened later in the season. But we can see that there is a positive relationship that's evident, and that is when the price of corn is strong relative to the price of soybeans, or in other words, when there's kind of a peak upward on the orange line, we see that that is roughly correlated with a peak upward in the blue line as well. So when corn is profitable relative to soybeans, they plant more corn, and that is absolutely to be expected. But we can use these signals to make an estimate about whether we think we're going to plant more corn than usual this year or less corn than usual when we're trying to make estimates about what planted acres will look like before we get the USDA estimates from either the prospective plantings report at the end of March or the planted acres report at the end of June. In figure 4, we're a little bit more careful about checking out this price ratio and the signal that it's sending to farmers to plant more or less acres of corn versus soybeans. So what figure 4 shows is the December 2017 corn futures price and the November 2017 futures price for soybeans, and taking the corn and soybean price ratio, so price of corn divided by the price of soybeans. Now the x-axis there runs from October 1st, 2016 to May 1st, 2017. Now, if you think about it carefully, that's roughly the period in which farmers will be making planting decisions for the 2017 crop, the crop that's harvested in the fall of 2017. Now, that's true because farmers often apply fertilizer in the fall for corn, and so they have to make at least preliminary decisions about which acres are going to be planted to corn in the fall so they can get that fertilization done. There is still some flexibility there. But you do have to consider the fall of the previous year as part of the acreage decision for a farmer. So, what do prices look like in this year? Well, at the beginning of the price series shown here, we've got the corn-soybean price ratio is kind of high, but it's falling throughout that fall period until about the end of the year. Now, what that should tell you is your expectations about corn acres should be getting more and more modest as you see that corn and soybean price ratio falling, because that means that, at least on the revenue side, soybeans are becoming more profitable relative to corn. Now that sort of hits a bottom at the end of 2016, and it starts trending upward through the spring. So during this whole period, people who are trying to forecast balance sheets will be updating their expectations about what acres might be, and this kind of chart will be informing that. And then at the very end here, this is sort of the beginning of April, we see this big spike in the corn and soybean price ratio. Now that big spike corresponds to the release of the prospective plantings report at the end of March. When the USDA released that report, they estimated corn acres to be 90 million acres, and the market reacted to that by saying, boy, that's not as many acres as we expected, and maybe we need some more acres than that. So the price ratio and those price signals to farmers really dramatically shifted in response to that report. And suddenly it became more profitable to plant corn relative to soybeans, at least from the revenue perspective. Now that is pretty late in the decision time frame for deciding whether you're going to plant certain field to corn or soybeans, but that was a pretty strong price reaction in terms of the relative profitability of corn versus soybeans. So you might expect that some acres were able to shift from being expected to plant to soybeans to being actually planted to corn. And that's actually exactly what happened this year in 2017. When we got the acreage report at the end of June, we were nearly 1 million acres higher on the corn planted acres than we were on the estimated prospective plantings report. So it seems like in response to this jump in the corn-soybean price ratio, farmers shifted at least a little bit on the margin, some acres they were intending to plant to soybeans, to corn at the last minute.